Hey guys, Marty Boots here. Today is the 26th of September 2019. I want to make a little bit of a different video for you today, and I want to talk about the looming impending financial crisis. But first off, I'll talk very briefly here on Bitcoin. Now we got the breakdown of the descending triangle, and we talked in our group about how we were going to break down, and I had been short from up here on this wick. So there's a beautiful short, 20 something percent from memory. 20. I didn't get the 20. I got 18% out of it actually. I closed out 18% profit, but it dropped. There you can see 24%. But anyway, so what is going to happen now here, guys? It really looks like Bitcoin is consolidating here, and this consolidation process should take a bit of time, and we should actually go lower and have another break lower, but we will see how that plays out and develops. I will make another video on that in the near future. Back to the financial crisis. Are we going to have a financial crisis here, or what is the story? So I want to go through some of these details, very important details. Now, we all know last week the Fed printed 275 billion. At least they're in the process of doing that over the next period into October. And a lot of crypto Twitter and Alessio Rastani and a lot of other YouTube analysts and different things are calling for a recession, that this can be the start of a recession. Now, I want to talk about that, and there's two sides to the coin here. So I want to go into that in more detail. This is the overnight, the rates that spiked, and they spiked hugely, and the Fed lost control of the rates. This is the Fed's job, basically. That's the easy way of putting it. The Fed control these rates, and they control the economy. If they lose control of these rates, they lose control of the economy and everything else around it, the stock market and everything else. So the Fed's job is to keep these rates low at the 2%, or whatever, the roughly 2%, 2 to 3% is what the guidelines are and what they want to keep them at. Now, if they lose these, it's a sign of weak bad. It gives off a bad confidence sign to investors and traders in the market, and to banks, institutions, and stuff, and it causes a bit of panic. So the Fed needs to control these. So the Fed, you can see here, they spiked up and came right back down. The Fed jumped right out and printed money straight away into the market, pumped money into the market, quantitative easing. So the Fed were obviously watching this, and the Fed have a plan. The Fed have a major plan, guys, and you can see this. The Fed are printing money, and they have a plan. So the thing is, what I want to talk about is this is the first time this has ever been done, guys. The Fed knew exactly what they were doing. They have this well planned out. They printed money up here on the highs of the chart. This is on the all-time highs. This has never been done before in history by any country on the highs. This is new territory. So this is I think it's a major plan here, guys. This is either going to backfire really badly, or it's actually going to work and going to pump these markets to new highs. So I want to go through that. They obviously they printed 275 billion, and they lowered interest rates right up here. And what this does, guys, is let me just get it. The last time they printed 600 billion was down here. And what happened when they printed 600 billion? That happened. This monstrous manipulation pump. So and they kept interest rates low. So with low interest rates and the quantitative easing and the pumping money into the market, this was the result. So now we have just printed half of that amount again, right up here on the highs, and they lowered interest rates again. So, and here's the thing a lot of people don't know. It takes 6 months for quantitative easing to take effect in the market. So I just want to go to a monthly chart here for a second. It takes 6 months here for this to take effect. You can see they started printing down here, and by the time we got round here, the markets had it had filtered into the markets, for example, or whatever you want to call that, and then it allowed to pump the markets. So this will take 6 months for that to work. So who knows what's going to happen in the next 6 months. But what will take effect very, very soon in the near future is the lowered interest rates. The lowered interest rates should support this market. And in theory, it should support this market. That is the Fed's plan. Support the market with low interest rates, and it'll cause it'll cause spending, and creates growth. So, and it creates lending. Also, low interest rates creates more lending, and this should prop up the market in theory. And then in 6 months' time, when the printing money takes effect, this should it should, in theory, I think their plan is to pump this market higher. Now, what I want to show you here is their plan going to work. Like I think that they're trying to create a soft landing for this market. I think they're trying to pump it higher, and then in maybe in a period of time after, if their plan works and the money printing pumps the market, I think then they will lower or raise interest rates, and the raised interest rates will put pressure on the market, and they might get a soft landing. Everybody's expecting this market to crash and have a financial crisis. Now, I think what the Fed are doing right now is trying to create a soft landing for this market. So maybe they get a consolidation period like this, for example, something like that, instead of that hard landing that everybody's expecting. We'll get to that in a minute and elaborate on that. What I want to show you here, guys, this is very important. This is very important. This could be critical. There's number one. Now, you might have seen these on the chart a minute ago before I deleted them. Here is number two, and here is number three, right here, guys. Now, this is very important, and it's almost like an abandoned baby. It's a doji, and it's a sign of indecision in the markets. You can see here at the top of the .com bubble, we formed this doji, almost like an abandoned baby, and we had the biggest crash in history, almost one of the biggest crashes in history, we'll call it. And this was world changing, this crash. Again, on the financial crisis, we had almost an abandoned baby type candle, a doji topping candle, and you can see there that we had the financial crisis. This was the financial crisis, guys. This changed the world. This actually changed the world. This made countries almost bankrupt. Oh, some countries did go bankrupt and are still paying the debt and are still almost bankrupt. It made almost continents bankrupt. Between Europe and America, the debt has skyrocketed even since then, trying to get out of debt, and they're almost still bankrupt. Now, here is the third one, guys. Look at this right now. Look at this one. This is an abandoned baby. There is, if I bring my calendar up here, there is 1, 2, 3, 4, 5 days left until a new month, until a new 3-month candle. This is a 3-month candle, guys. This is massively, massively important. This, look at this right now. And look at this, and look at this. This could be the short of your lifetime right now, this very second. This very, very minute, this could be a short of your lifetime. Now, I'm going to give arguments for this. I'm going to give an argument for this to be the short of your lifetime. Now, notice here there was a stop hunt. Price did actually pierce above that, and then it failed and crashed. Now, if you go back to the tech bubble in the year 2000, 2000, you can see here that this short right now on the green candle would have changed your life. That would have made you a multi-millionaire, even with a small short, a few short of these futures, and held these on 3-month candles down until the blue 200 moving average. Now you can see there in the markets from up there, that is rough, we'll just call it a 43% move. On futures, guys, that is life changing. You would be a multi-millionaire. You can see there, even down to this blue one, it's the blue is the 53-month moving average, the 50 moving average. Sorry, the exponential moving average. Now you can see here that's a 34% drop. Now, if this financial crisis is to actually play out, it could be a lot more than that. You know, we could go down and test these previous highs down here, and that is a 50% drop. Guys, if this is the top right now, you know, that is serious life-changing money. Now, I already talked about how the Fed are trying to prop this up. It's either going to work really well and this is just going to go higher, or this is going to top out and that printing money is going to do nothing, and it may give us a bit of a softer landing, but at some point this money printing is going to stop working, and I want to talk to you why it's going to stop working. If Japan, guys, Japan back in 1989. Sorry, you can't really see that there. Let me just go down. Okay, there we go. Japan back in 1989, guys, had the strongest economy on the planet. In the 80s, it took over the USA to have the strongest economy on the planet. What happened? They had a financial crisis. This drop here is actually a 50% drop. Okay? It took 5 years, guys, before they printed money. They did not act straight away. If they acted straight away, it may have been different. Their economy might have stayed stronger. You know, things might have been different. Like this right now. This is why the Fed is printing money right now on the highs. They are learning from Japan's mistakes, and I will go into that in a minute. So you can see here, Japan has still not took out the previous highs from 1989. That is 30 years this year, guys. 30 years. Now, it is actually called the lost decade in the 90s because it was totally stagnant. There was no growth. There was no growth whatsoever, but that name, it stuck. But it's actually 3 decades now since Japan has had any real growth. Okay, with that in mind, now, what can you learn from Japan's lost decade? That is back in the 1990s. Now, Japan's lost decade was largely caused by speculation during the boom cycle. Record low interest rates fueled stock market and real estate speculation that sent valuations soaring throughout the 1980s. This is exactly what happened in Europe and exactly what happened in America. Upon realizing that the bubble was unsustainable, Japanese finance ministry raised interest rates to try and stem the speculation. The move quickly led to a stock market crash and a debt crisis. It also led to a banking crisis, guys. Now, I will point out that they raised interest rates from 1.5 to 6%. Now, they raised interest rates up here, and this is how you prick bubbles, guys. This is how you prick bubbles, is by raising interest rates. The Federal Reserve are not doing that. So this is the warning I want to get. This might be the short of your lifetime and might make you millions. Look at these candles here. Look at these candles. This could be the short of your lifetime. But they have not lowered, they have lowered interest rates. They have not rose interest rates like Japan. So it is a sign that they are trying to prop this market up. It is a sign that they are trying to maybe make this market go higher. So that is the warning and the caveat. Also, the printing money up here is unheard of. This is new territory, groundbreaking, and nobody knows if this will work. So it's unheard of to do this, guys. So they have a plan, guys. They all obviously have a plan. And I think their plan is to maybe give this a soft landing. So at least, I mean, even if it's a soft landing, guys, there is still life-changing money to be made here. Now, if it keeps pumping, that's a different story. But nobody knows how this money printing and the lowering interest rates will affect the market right now on all-time highs. So, that's it, guys. That's it. I wanted to bring this to your attention. It's the two sides of the coin, guys. Is the Fed's plan going to work to prop this market up, or is this going to be the short enough opportunity of your lifetime that can potentially make you millions of dollars? If you trade futures, you will understand that, and this is a huge opportunity. That's it for the video, guys. Thanks for watching, and please give the video a thumbs up if you enjoyed the content, and subscribe to the channel. If you'd like to join us in our trading room, we're in there every single day, improving every single day, studying, improving, working on our trading, teaching members, trying to make a life-changing money in this market every single day. So if you'd like to join us in there, hit us up in the link below and sign up for the 3-day free trial. Thanks for watching. Have a good day.